Hello, my name is Matthew Greentree. I'm the Managing Director of Ausgold Limited. We're a development company looking at the Katanning Gold Project in the southwest part of Western Australia. And we've got the largest undeveloped free milling open cut project in Australia.
And going to get into production, aren't you?
We are.
One of the rarities in Australia.
Of course.
Hey, how are you? We've got Matthew squared today. I'm here visiting you in Perth, so thanks for coming over and seeing us as well. Just want to talk about 2022 though, before we kind of leap into what's going to happen and some sort of guidance about 2023. It was a pretty crummy year for everyone. You kind of held your own. Stock price moving sideways, which is a win in this environment, I suspect. But what were the things that you think you did last year that you didn't get credit for that you should have?
Yeah, of course. Well, we snuck up a little bit from beginning to the end of the year, but we did a lot of work. We added 980,000 ounces in our resource, so we cracked the 2 million mark, which is a big milestone.
Yep.
A lot of drilling. When we achieved that really low cost threshold too, so each ounce cost us $11 to discover. And on the back of that, we put out a pre-feasibility study. And as I mentioned in the introduction, this is a big project, and I think it's getting bigger with the work we're doing.
But is that the name of the game? Right, before we go there, you feel a little bit irritated that you kind of didn't get that credit for, there's a significant amount of new ounces, yes, right? And a lot of money spent doing it. And the market just shrugs its shoulder. But are you ever going to get credit for that?
No, well, it's frustrating, of course. It's very frustrating, but I think we're building real value into the company. I think it would be more frustrating if we spent that money and didn't get that outcome, particularly with the ore reserve, which is monumental, 1.28 million ounces in reserve.
Yeah, okay. So spent the money, building up the resource and reserve, there, which is great. But we've got to remind people, what's the plan here, right? Yeah. Because this is kind of, the grades are okay, but can you make money at those grades?
Oh, absolutely. We're looking at Capricorn, which has got grades significantly lower than what we're looking at, and definitely making good money. Probably one of the best performers in the last round of quarterlies out of the December quarter in 22.
Right, and so I can't believe I'm going to ask this question, but we got to, because some audience have different levels of understanding here, which is, again, are you trying to say that grade doesn't matter?
Just a different way of tackling the studies and the build of the project. Remembering though that the first 6 years, the grades are actually quite a lot higher than the overall head grade that we report as an ore reserve. So the first 2 years, we're looking at close to 1.8 grams per tonne, which is not to be sneezed at.
What are the other variables that matter?
Costs, definitely. Mining costs, processing costs, energy costs. A couple of wins we get with energy is being able to plug into the local power grid. I think people costs, we're in quite an attractive location, so I think being able to keep that staff turnover low, being able to attract a good workforce is going to be key to this project.
Right, and you did the PFS kind of right in the middle of this kind of economic crises that we faced last year, off the back of COVID, off the back of supply chain issues, off the back of inflationary pressures. Do you expect because you're moving straight to a DFS, are you?
Yeah, we are.
Okay, so you're skipping the feasibility stage, moving to DFS, and what's the timing for that?
End of the third quarter this year. So we started that officially beginning this year, but we've done a lot of the work through the PFS and at the back end of last year.
Right, and so obviously you'd be looking to kind of squeeze out any kind of economies of scale that you could anyway, but do you think you'll sort of get the benefit of some of the falling away of the inflationary pressures as well?
Oh, absolutely. We've already seen diesel prices come off quite away from their peaks in the middle of last year. Mining cost pressures, I think that there's some wins to be had there, and part of what we're doing at the moment is looking at some of the potentials for scale. We assumed a 3 million tonne throughput on our mill. We're having a close look. Is that the right number? It could be larger because the deposit probably will support a larger operation there.
Okay. And if we look at the messaging from last year, right? Sure. Okay, I know it's a tricky environment, but it was for everyone. But you've got to have a view on what you need to be saying to the market this year, because it's a good size project now. Do you need more ounces for this to? Because I'm thinking, a single project asset with a single strategy, it's kind of precarious environment to exist. I mean, have you got any other kind of plans? Have you got any other stories that the market may react to if they don't react to the development one?
Look, we've always had sort of multi-pronged strategy with this. We've maintained a large tenement holding in the southwest. We're first movers down there, so we picked the eyes out of it in terms of gold. We committed to a 25,000 metre drill campaign, which was looking at simple extensions to the resource.
When was this?
That was December last year.
Okay.
So late in the year when we first really got our rigs rolling, because you've got to remember on agricultural land, so we work counter to the agricultural cycle. So December through to May is our main field exploration season. The guys have been really busy down there. We've got 3 rigs running today. One aircore rig looking at regional targets, a diamond rig and an RC rig looking closer to the main project area. We've got a number of targets identified, but particularly on the northeast side, there's some advanced projects that we're quite excited about around the Stanley joint venture, Duggan, which was a discovery last year, which really delivered some very high grades.
Yeah. And
to truck that ore to our main projects, it's not going to have a major impact on the cost per ounce. It's probably going to be about $2.
Right.
So high grades there, particularly oxide, which we're quite short on in this project. It's only about 10% of the ore reserve. It goes through this mill at 6 million tonnes per annum rate. So there's an opportunity to have some wins there.
Okay, so there's a bit of blue sky potential. We'll talk about again a little bit more detail on the type of drilling, what you hope to add to this story. But on the development side of things, obviously moving through DFS by the end of this year is great news. Hopefully the economics continue to improve because they're pretty good. I mean, you sub $1,000 on the ASIC, which I think is pretty impressive for companies in today's environment. Are you still the guys who are going to get this thing into production? Because there's a lot of people talking a good game. Can you guys get into production and run this thing and start driving cash flow?
Oh, I think we can. Look, we've got a really good understanding of the technical aspects of the project. Now we're bringing, got some good supporting brokers who are really helping us sell the story as well, getting that into the market understood. And really the financing's the next big game here, really. Of course, you get the technical studies underway and look at...
CapEx is not too heavy, is it?
No, it's not. It's 225 million, which is including pre-production mining. So that gives, it's probably a little lower than that in terms of the build.
Yeah, and we're still in Aussie, obviously.
Of course,
right. Okay, so that's not a big burden for you. But I think, obviously shareholders are going to be concerned about dilution, the usual sorts of stories. In this, I'm not quite sure of the Aussie market in terms of capital raising, in terms of what kind of split between the debt equity ratio, or indeed if there's a kind of alternative financings, or would you even kind of consider royalties and that sort of thing?
Look, we're looking at everything. You've got to be a bit careful with some of these different mechanisms. They can bite you later on. But because of the early payback, we're talking 18 months. It's not a long time to carry a debt. Yeah. And I think that's quite attractive to the sort of more vanilla financing options than perhaps other projects.
Right, but okay, I know you're out there talking to everyone at the moment, but it's a little bit early pre-DFS, but would you be looking to try and get some conditional term sheets this year?
Oh, absolutely, this year. Some of those discussions are already started. So we're looking at the idea of what the project will look like. We're looking at some optionality around that alongside the DFS as well in terms of different levers we can pull to get better outcomes for the project. And of course, financing is a big part of that.
A huge part of it. So are people, right? In terms of it's a very competitive environment out there, it's a very expensive environment out there. In terms of it's not just people, it's skill sets as well. So it's complex. How do you get around that? You're in a good location. I think that's a good start.
Oh, it is. Yeah. There's a couple of things going on. We're in a good location. Agricultural community, incredibly supportive. I spent last week down there talking to the various shire presidents and getting a feel for what they can see, the synergies with their communities. The other great thing is that it's 3.5 hours out of Perth. It's ideal setting if you want to go residential, because it's actually not too far to go back to town. It's also a pretty good place to work, climate-wise. The scenery is nice. Everything seems to play into that card that it's a nice place to work and be a nice place to go to work for a long period. Yeah. And the long life of mine also is quite attractive too, because we're not in there and shutting down before we've started. It's 11 years at the current mine plan. I think there's opportunities to make that quite a lot longer as well, which also plays into what the communities will expect to see from us.
Okay, and we also got a big non-Aussie contingent looking in here. Mm-hmm. They've been used to hearing stories in South America, even in North America, Canada, First Nations, Indigenous issues, social unrest, etc. I know the Aussies often quote the Fraser Institute, #1 ranked country, if not state, in the world to work. It keeps going. But it's kind of true in the sense that it's a mining state.
Of course. Yeah.
You still got to do the things the right way in the right order and so forth. But it's, people look at it as employment, they look at it as salaries, they look at it as, state revenue, royalties, etc. So that's still the case, is it?
Absolutely, and I think having the community on site is important, and that's why we're doing a lot of work, making sure that everyone knows what we're doing and understands what this will look like longer term for the community. The other things that I think come into that you mentioned there is, I guess, the broader stakeholders, First Nations and the like. That's less an issue where we are because of the land title. So it's a little bit different to maybe some of the Crown land projects that you see elsewhere in Australia.
Yeah. You still need the social license.
The social license is important, and I think we're being fairly transparent. So that's been fairly consistent messaging from us. So that's I don't see that as I see it as a critical path for the project, but I don't see it as an issue.
It's kind of interesting, actually, because we speak to obviously so many companies on a daily basis around the world, and ESG was a big thing for 18 months, and social license as well. But when the kind of rubber hits the road, is the company doing all the things necessary to ensure that it can actually get into production,
of course,
whatever that may be, right? Because shareholders, I'm sorry to speak so crude about it, they care if the share price moves or doesn't move.
Of course.
If you do anything to damage it, it goes down. You hurt them in the pocket. If you do all things the right way, you'd hope to get credit. Now, that didn't happen in 2022, so I've got to look at 2023. Where do you think the value is going to be attributed? De-risking, continuing to de-risk the project as it moves through production, or you just talked about the drill 25,000 meter drill program, adding higher grade ounces, adding more ounces. What should they be looking at?
I think you look at both together because they're not disconnected. The de-risking of the project, our downside risk is the PFS, which is a fantastic outcome.
Right.
What I see with the DFS is reducing that risk further so we get into position for financing. And again, that's another key milestone. A finance project, a permitted project is much more valuable than one that's earlier in the life cycle.
So you're permitted. We're working towards the financing by the end of this year, is that?
That we're permitting and financing in together.
Oh, so the permitting's coming?
The permitting's coming.
How long does that take? When was it actually submitted?
Yeah, look, it's still to be submitted, but we've done the baseline work. So that's coming through in parallel with the DFS
so that would
studies.
Be next year,
Next year,
Right. And how long does the process take here in WA?
12 to 18 months.
Okay.
So it's reasonable length of time, but what we're doing is front loading the work so that permitting process sails through rather than having rights of reply.
That gives a sense of timing of the financing, because no one's going to finance you without it.
That's true.
Okay. But you make, like I said, you'll get conditional offers, but so you'll be submitting when, just so I'm clear? For year half?
Yeah, that's next year. Yeah.
Next year, submitting for the permit, and it takes 12 to 18 months. Yeah. So I'm trying to work out the sort of timing.
Yeah, so I'm looking at where we're at today, 23. We'll be putting that in alongside the DFS work at the end of this year, and then get going in through next year.
Right, so that gives us a sense of, because why it's important is because if you can say, well, if you need to attribute value to both of those things, people need to understand the timing of both of those things. So the development phase, we now understand what that timeline is. So if we come to the drill program, so you started the 25,000 meter drill program. Will that be completed before the end of May? Is it?
Look, it's well underway. So we've drilled almost 9,000 metres.
Oh, have you? Oh, wow.
So we've really cracking on. Results are coming, so I expect to see those pretty soon.
And that's, you said, oxides. It's all pretty shallow stuff.
Mixture, but
okay.
But we're looking on our regional side, oxide, high-grade ounces, what the potential is for another mining centre away from the main Katanning project.
Yeah.
We've done some deeper drilling underneath the current resource. Yeah. And one of those comments you asked, what did I do? We didn't get much credit for. That was part of it. We've drilled under the ore body and got some substantial high-grade results that aren't in the current resource, but will come in the resource update in the third quarter this year. Okay. So those things are still coming. The regional side will add to the total resource balance ounces and build the project potentially to a larger scale. And the studies work alongside our current project is, can there be more? Can this be a larger operation, pouring more ounces per annum?
Okay, and just, again, money's always important. So you're a fully funded drill program. You don't need to raise any more capital. Obviously, given the timing, or how far out we're looking for, on the development side of things, where's your current cash flow get you through to? Or cash get you through to?
Yeah, look, it gets us through this year. A good portion through this year anyway. We've got about 5.8 in the treasury at the moment.
So that's not going to deliver the DFS?
No, but it'll get us a good chunk through. And you also got to remember, a lot of the work, the expensive work for the DFS is pre-spent. So I'm talking about what was in the December quarterly and what's in the treasury today. Yeah. But we were drilling and doing DFS work in late last year.
So you probably, by the time your assays getting quicker over here, you sort of seeing stuff?
A little bit quicker, but not as quick as I'd like to see them.
Okay. But would you look to kind of raise additional sort of top-up cash after the assays come back, presumably?
Look, we'll top up at the right time, right price. Yeah. Okay. Look, but we're not starved of capital to do what we need to do.
You can time your spend accordingly, right? You're still in control of that.
Yeah, and look, we're pretty fortunate position to have some large shareholders that are keen to see the story progress as well.
Yeah, I mean, with the share, it's interesting, isn't it? Because you're gonna have to build on that share register and the types of profiles there on the institutional side. So you're doing this sort of trotting around. I know there's a big conference, Fremantle tomorrow, of course. But what sort of conferences are you attending? What meetings are you having to advance that?
Yeah, look, I got around across to London last year, which was fairly successful. Yeah. And I'm actually going across to Mines and Money conference in Miami next week. Yep. And then back through London as well. So there's, we're getting that exposure and sort of reinforcing those connections as well in terms of, who's already on the register, but also people who might be interested in becoming shareholders.
That'll be interesting. Mines and Money could be quite lively, actually. I've just come back from Cape Town. Yes. A lot of investors showed up for that when they rocked up from all over the world, which is nice to see. And some non-mining specific, some generalist funds as well. But I think Miami looks to be like a full dance card, shall we say? Yeah,
look, it's sort of hitching a ride on the BMO conference, which is a very big gold-focused conference as well. So
you need to be invited to that, though.
That's right. So I didn't get an invite this time, but
I think
this one's running in parallel.
350 million market cap you need from BMO, and obviously they want to think that they can raise you some money.
Of course, yeah.
It's all conditional. Okay, well, I appreciate you coming in, giving us the update. Okay, it was good to see you back in December, Mines and Money, and good to catch up with you here in Perth.
All right, thanks again.